This is a special bonus episode of Squawk Pod with John Collison, CEO of payments company Stripe.
Unlike maybe previous booms that were more of a speculative nature, where you had just kind of asset price speculation, here we're seeing an AI boom that's very real. There's a bunch of companies that have grown and grown and grown over the past few years, but they've grown because they have real revenue, and they have real revenue because there are customers who find the products really, really useful.
The 15-year-old startup is now worth $91.5 billion, in part thanks to artificial intelligence.
OpenAI and Anthropic and Cursor and Perplexity and all the companies that rightly are getting a lot of focus right now because of what they're doing, they're all running on Stripe.
Collison sits down for a rare interview with Andrew Ross Sorkin to discuss where Stripe and AI go from here.
It is very likely that, you give agents the ability to actually go spend money for you.
Hey AI, go shopping and pay with my Stripe.
Oh, I like this shirt. I want to buy another one of it. There's no reason the agent can't go into your email, find the receipt, and then go purchase it again. And so we are building Stripe for that new world.
I'm CNBC producer Katie Kramer. Squawk Pod with Stripe CEO John Collison begins right after this. This is Squawk Pod from CNBC. Today's interview is a rare one with Stripe CEO John Collison. This week, Stripe announced a tender offer for employees and shareholders. The 15-year-old payments company is now valued at a whopping $91.5 billion. Huge, but not quite as huge as it was just a few years ago, back in 2021. That's when Stripe's valuation peaked at $95 billion. The company has offered tender offers before. Stripe is one of the largest startups to stave off a public listing. And these regular tender offers are part of why it has been able to stay private. Offers like this allow shareholders and employees to sell some of their equity. And in doing so, Stripe reduces the pressure from shareholders to go public. Last year, the tender offer valued Stripe at $65 billion, so this jump to $91.5 is substantial. Artificial intelligence is in part what drove this jump. Payment volume in 2024 rose up to $1.4 trillion with a T, thanks to Stripe customers like OpenAI and Perplexity. The big-name AI agents aren't the only ones using Stripe. Over 700 AI agent startups launched on the platform in the last year. Now, to catch you up, an AI agent is a software that can make autonomous decisions all on its own, answer questions, and interact with people without human input. Salesforce CEO Mark Benioff addressed this new era in Davos at the World Economic Forum earlier this year.
The World Economic Forum is now agent first. When you're here, you're working with the app. The app is an agent, right? And the agent is helping to guide you through the conference. If you go to the help for my company, help.salesforce.com, you'll see we have an agentic layer now on our customer support. So we get 36,000 customer support calls every single week. If you looked at it a month ago before we did this, 10,000 of those calls had to go to our human agents. We have 9,000 support agents. Now only 5,000 are going to the human agent. Now the AI is not 100% perfect. It has about 95% accuracy. But this is an amazing moment where, those agents then and those humans come together to resolve those customer support issues.
Our Andrew Ross Sorkin gets into all of this with Stripe CEO John Collison. But first, they start with the big picture.
There's a real sense that sort of in this deregulatory environment that there's going to be lots and lots of opportunities. So that's the good side. On the other side, with tariffs and taxes and geopolitics and everything else, there's a sense that maybe people aren't going to make investments, at least in the near term, because of all this uncertainty. Which side of that seesaw you think is winning out right now?
I mean, it's very dependent on the industry. I think you're seeing some industries like crypto where they're very much welcoming having a pro-crypto administration. Then you're seeing other businesses, ones that do a huge amount of cross-border trade, where they're very worried about the tariffs. And so I think it's very industry by industry.
Just in terms of thinking about this last year, you generated $1.4 trillion in total payment volume, and that was up 38%. That's equal to 1.3% of global GDP. How do you think this happened? And is it possible to stay at this kind of growth rate?
We are a transactional business, and so that means our growth rate kind of bounces around in the short term. And one of the reasons that we're very focused on the long term and how we run the business is you can't tightly measure it on a year-to-year basis. And so growth accelerated last year from 25% in the prior year to 38% payment volume growth in 2024. I imagine it'll be less than 38% in 2025, again, just because these things are lumpy. But what caused it to be so strong in 2024 was basically the combination of the businesses that were already on Stripe grew quite well. And we talked about the AI ecosystem in the letter, where all of the OpenAI and Anthropic and Cursor and Perplexity and all the companies that rightly are getting a lot of focus right now because of what they're doing, they're all running on Stripe. But also then what we saw is many of the world's leading kind of scaled established businesses, everyone from Hertz to Amazon to Comcast to Pepsi to Hershey's, started moving their business to Stripe. And so I think the confluence of those dynamics meant that 2024 was a particularly good year, but it's lumpy, and you cannot manage the Stripe business on like a super tight quarterly EPS basis because this growth tends to come in waves.
It does, and which leads me to a different question, which is that you've announced that Stripe was had profitable last year, on track for profitability this year. It took 14 years to accomplish this. Is it straight up from here? Do you see yourself making additional investments or other things that you think, year on year, here and there, could actually mean that it's not profitable?
Look, we love investing in new areas of the business, and we described a few of them. Crypto is a particular area of investment. We made a large acquisition in the stablecoin space that just closed in January. We also have Stripe Billing, which is our new software business, now at $500 million. But I would still expect that, even with those investments, we would expect Stripe to be profitable on an ongoing basis from here. But yeah, we love investing in new lines of business and in new functionality for our customers because the world isn't standing still. And again, I think that was the mistake that some of the legacy guys made in this space, is that people thought of payments as a sleepy, staid space where, we cracked it. Whereas actually it's really dynamic, it's really fast moving, there's tons changing in the ecosystem. And so we think those that don't invest are going to get left behind.
AI, huge watchword, huge piece of your business. How's it transforming what you're doing? How's it changing just even the day-to-day of it all?
Yeah, look, what I think is interesting about AI is that unlike maybe previous booms that were more of a speculative nature, where you had just kind of asset price speculation, here we're seeing an AI boom that's very real. There's a bunch of companies that have grown and grown and grown over the past few years, but they've grown because they have real revenue, and they have real revenue because there are customers who find the products really, really useful. And so it's very substantive in that way. And we talked about some of the dynamics that we see. We talked about folks like Cursor, who are very impressive and reached 100 million in annual revenue in just completely record time. We're certainly seeing that dynamic at Stripe. I think one of the downsides of AI is it is an industry where people are tempted to just say things for retweets on Twitter and demo vaporware and things like that. But there's actually lots of very real, tangible utility happening. In Stripe's case, this is anywhere where you have performance of a system that's handling huge amounts of data. We have the biggest advance in computer science since the transistor, in the form of these models that are much better at handling very large amounts of data. It would be suspicious if all these new AI techniques and advantages and advances did not lead you to better performance in those parts of the business. And so, we talk about this in our letter, where when it comes to fraud prevention, Stripe has gotten much better at that over the past 2 years. We've seen an 80% decrease in fraud over the past 2 years because of this reputation network that can take into account everything that's happening across Stripe. We talked about in payment performance. But basically, I think corporate leaders should be demanding more improvement in tangible metrics and less shiny demos.
You mentioned this idea of real revenues coming into so many of these large language models and other AI companies. And it is very true. There are real revenues, no question, in the billions of dollars. But there are even more losses in that world. And I wonder, given how much of this business may be part of your payment system right now, whether that presents a risk to you. Meaning when you look at DeepSeek or any of these other things where people start to question, whether this is all going to work, whether the economics of this long-term work, whether the scaling laws work, and whether the economic scaling laws work. What's your take?
Look, it's a highly competitive industry, and I think that's why it feels very exciting to be in tech at the moment, because you're getting all these advances and leapfrogging of models that's happening and everything like that. So it's for sure competitive, and I think if you bring any of the AI leaders on their show, I think they'll tell you that, and they'll have that look in their eyes. No one has, and it's good as consumers of this stuff. We should not want anyone to have a monopoly on that functionality. But you always get this dynamic in the early days of a new industry where people rack up losses in the early days as they do the kind of core build out, and then it takes more time for the business and the profitability to mature. So I don't think that's an anti-AI argument. Again, I think you have to ask yourself the question, does this actually work, and does this provide value? I don't know about you, I'm deep researching up a storm these days. Like, I'm definitely generating compute bills for someone, and the value's there.
Oh, look, I'm getting great value out of it. I just don't know if OpenAI is getting enough great value out of me to technically be able to afford all of their doing, which leads to a question for folks like you and anybody else, people who are building data centers and everything else, 10 years from now, whether all of these companies that are on your platform will still be on your platform. You've worked with small businesses for a very long time, so I've always thought that you may have a better understanding of what churn looks like for a lot of businesses. Some, of course, hopefully go on and have enormous success, and others, I imagine, don't.
Yeah, but again, we're not making a market structure prediction for 5 years hence or anything like that. We have a portfolio approach where, the 1.4 trillion you referenced that Stripe processed last year was across millions of businesses on the Stripe platform. So there's always going to be winners, there's going to be losers, there's going to be people gaining and, losing market share. But, I feel pretty good betting that the AI economy is going to grow.
We spent some time with Mark Benioff in Davos recently and talked about AI agents. And the possibility of using AI agents in the context of commerce, which is, of course, your land. How have you been thinking about it in the context of commerce? How do you think about fraud? And are you excited, or do you worry about the prospect that my agent is actually going to be making transactions on my behalf without, hopefully, actually, if it works properly, my approval or my direct, physical approval?
I think sometimes companies make a mistake of, are we excited about this? Are we not excited about this? Do we want this to happen? Do we not want it to happen? Like, things are going to happen the way they are. Markets move, and you have to be able to keep up with them, and that's guided us for a long time up to now. It feels to us inevitable that agents are going to be out doing stuff on the internet and buying things for you on the internet. Where right now, again, like you have your agent go and do stuff via deep research. And yesterday I asked a bunch of questions, and I went to get lunch, and it was off researching for me as I was eating lunch. But right now, agents are working primarily in a read-only modality where they're pulling things in off the internet. We think it is very likely that you give agents the ability to actually go spend money for you. I like this shirt. I want another. I want to buy another one of it. There's no reason the agent can't go into your email, find the receipt, and then go purchase it again. And so we are building Stripe for that new world, and so we have an AI agent toolkit. It's the leading toolkit for agentic commerce. It's already been used in a bunch of places. Perplexity has made it where they can actually go out and do things for you in the real world. So we are very much preparing for this agentic commerce future.
Another world that you spend a lot of time in is the creator economy, and I noticed that one of your clients happens to be TikTok. Do you have a view about the future of TikTok and whether you're going to be providing services to it?
In the current climate, I think it is very hard to make predictions about anything. But yeah, we partner with TikTok. We partner with them on a global basis, and they're a very impressive company and business, and they have a global business regardless of what happens in the U.S.
But currently, you're still supporting them here in the U.S.
TikTok runs on Stripe, yeah.
So, but take us through that thinking, though, because obviously there's a whole bunch of other companies in the country that have decided they can't support it because they don't know what the actual rules are. Obviously, the president has said one thing, and Tom Cotton and technically the law have said something very different.
Yeah, I'm not in the details enough of all of the mechanics, but we have a lot of people on the supportability teams at Stripe who go through the minutiae of this. But yeah, I'm not close enough to the details on it.
Okay, fair enough. The debanking debate in America, and you saw obviously President Trump go directly at Brian Moynihan from Bank of America and even name check Jamie Dimon with JP Morgan. You're involved directly with customers who are trying to get on these platforms. Do you think that people are genuinely being debanked for their political views?
I mean, this is, I feel like this has lately come to the forefront of, the public consciousness, but it goes back around 50 years of financial regulation, all the way back to the original Bank Secrecy Act in 78, where we have started to kind of the financial system has started to become more involved in financial policy enforcement. And then you tend to get these occasional flare-ups from time to time. There was the case in the UK of NatWest and Nigel Farage, and all these various cases that tend to come up to prominence. Our philosophy is that we would, broadly speaking, like to be as as permissive as practical and as permissive as we can in terms of who can use Stripe. But I think it probably would be good to get more clarity on those questions. And so it's sometimes a useful debate to have.
Is your sense that the debanking is actually a function of the political views, or do you think that the debanking is a function of what might be described as regulatory risk, and the banks look at industries like pot, they may look at crypto, they may look at the gun industry, they may look at other industries, and maybe some of those industries are more aligned, or some of the people behind them are more aligned politically on one side than another? Is it that, or do you think it's the actual risk that these folks are going to default or otherwise not make the payment properly?
Banks are tightly regulated, and they in general want to have a sound book of business, and they don't want to get into arguments with their regulator. And so I think people sometimes interpret things through a political lens that is actually just a bank saying, it's not worth the hassle. Now, I think we should separately have a political discussion about, if you have banks saying that, various sectors of the economy are not worth the hassle, maybe that has bad outcomes. But I think oftentimes people ascribe motives to what is actually banks just saying, not worth it, not a profitable line of business for us.
Right. And dare I ask, what's your relationship with banks these days? I ask because I remember reading an article in the Information that Wells Fargo had stopped providing certain data in terms of bank identification numbers to some of the fintech companies, which then, of course, increases the prices for transactions on Visa and MasterCard and the like.
Yeah, Stripe is interesting because Stripe is not a kind of new separate financial system like some people have proposed in a crypto context or something like that. Stripe is very much providing access to the financial system that exists for businesses, allowing them to take money from people all over the world. And so we have to partner pretty closely with all of the major banks in the United States and the wider world to actually make the product work. And sometimes that can look like, for aspects of treasury within the product or things like that. Sometimes, we do even deeper partnerships, like we've started partnering with folks like Capital One to actually make the payment authorization flows work better and more efficiently. And so I'd broadly say, it's pretty collaborative, us working with banks, because payments is a intrinsically, fundamentally collaborative industry where it is, between two parties, and so you have to be able to work with people.
But so the banks are not doing what was described in the article? I mean, are they purposely doing that to raise the cost, or what's that about?
Oh, no. I mean, there's always been changes in who kind of gets in the industry or gets out of the industry and things like that. But, again, I think what's interesting about our industry is you take someone like Chase. We will simultaneously compete with them where they have an offering that does something similar to Stripe with Chase Payment Tech, and we'll compete for business there. And we also have a super productive relationship with Chase, and we'll go and partner on a whole bunch of aspects of the product and making things better. And we work with them. And so I think you have to be able to partner with people even if there are like little aspects of competitive. And I think the banks are used to that as well.
Right. So one of the big things you're doing is announcing a tender offer. Company valued at $91.5 billion. It's your fifth tender offer. Brings you closer to the highest valuation back in 2021. walk us through the thinking about this tender offer, and also walk us through the thinking about being private versus being public at this point.
Yeah, so we're excited to do the tender offer that we're announcing this week. Like you said, $91.5 billion. We very much care about providing good liquidity for employees and existing shareholders. And so this is the third, I guess, major tender of its ilk that we've done, and we're allowing both current and former employees to sell. We're not dogmatic on the public versus private question. We've no near-term IPO plans, but I think we just tend to always every year ask the question of, is Stripe better off as a public or private company? And at the moment, given there's so much going on, we're profitable, we're investing in new lines of business, we've got all the AI changes, all the stablecoin changes. It's nice to be able to focus on that, and like I said, focus for the long term rather than managing the street and near-term financial performance and things like that. But that could change in the future, and so again, we're really not affixed to any one position here. But while Stripe is private, we think, given that we've got a very large employee shareholder base, we just want to make sure that people have access to the value that they have created. Stripe was really started from nothing 15 years ago, and so that's kind of the thinking behind the tender offer. I also think the private markets have obviously,
What would be the tipping point for you? Meaning, what would be the argument that you would ever make at any point to say, maybe it is worth being public?
Yeah. Kind of tautologically, if we were better off as a private company rather than as a public company. But again, at the moment, we can achieve all the objectives we have as a company, where we can continue to grow, we can continue to invest in all the new lines of business that we want to invest in, and we can give liquidity to employees. And so we're kind of able to do everything that we want to do. I think there's also maybe something to the nature of Stripe's business, where we don't, I think some other businesses have, if you're a semiconductor company, you have waves of CapEx cycle and you want to have the option of doing like a massive fab build out with equity capital or something like that. Whereas, I think our CapEx and investment needs tend to be perhaps a little more predictable a priori.
John, I want to thank you. It's always great to see you. Congratulations on another spectacular year.
Great to see you too.
That does it for this bonus episode of Squawk Pod. Thanks for checking it out. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. To get the best of that TV show, plus a little extra, follow Squawk Pod wherever you're listening now. Have a great day.